Hello, Jim Malone here from Dallas Trading Floor. Just wanted to give you an update on the trade that I entered on Friday. It's a covered call play on Nvda, and Nvda has been doing extremely well as of late. Here's the current chart of Nvda taken this morning. It's currently at about 688.24, which is up about 4% just in the day. 25.6%. What's significant here is that we have a lot of institutional money that is coming into this stock. Now, it did move above. There was a resistance at about 620, but it's now well above that. So it is kind of extended. But as you can see, a lot of institutional money coming into the stock. The composite rating on this one is 99. It doesn't get any better than that. And this is, by the way, in one of the best categories, which is the AI chip area. If we look at the ranking of Nvda relative to other stocks, you'll notice that it's number 2 after AMD. But I think after today, it should be number 1 again. AMD is also a very, very strong competitor in this space, mainly because they are also in the AI chip area. But 90% of the AI chips currently are made by Nvda, and I don't think that that's going to change anytime soon. We have a number 1 ranking on this one, so very, very strong in terms of that. Also, you'll notice Rambus is in there, ARM, and Broadcom. I currently own AMD, Nvidia, and ARM, so that's basically very concentrated in the chip space. With Nvidia, what I'm trying to do is create a covered call, and the way that's done is by purchasing the underlying stock and then selling a call. In this case, the underlying stock for $13.30. The idea here is that as the stock moves above 660, the value of this option will fall, and then eventually it will become worthless, and we will keep the money. But we will protect ourselves to the downside, and that's the really key here. Because this is such an extended stock, we want to be very careful to the downside. We want downside protection. So to create that call, that covered call, we first buy the underlying shares and then we sell that call so that we get that protection. So our break-even point is much, as you can see, the break-even point in this trade, this 5-day trade, is $646.74, and we have a probability of profit here of about 64.7%. You'll notice if we just keep at this level, 660, and of course we're at 680 now, 688, we will make all the money by the end of the week. So this can be a very, very good trade if we're in an extended position, and definitely that is the case with Nvidia stock. You'll notice that there is consolidation here, but the stock is moving up very, very rapidly. This is an extended stock, so there's a very high likelihood that this will pull down and come back to an equilibrium. This is one of the reasons why we do covered calls at this level. I'll be checking in with you again probably on Friday to see how I did on this one. But it does look good so far. We were up significantly, of course, today, about 4% on this share. In order to make money on this one, we're shooting for a return of about 2% in a week. So very good return if we can do it. And I'll be getting back to you later on this week with this Nvidia covered call. Thanks for watching.